Right now, the Dow on the pace for its best week since February and the best for the S&P 500 since March. And as the index keeps moving up, despite, by the way, think about yesterday's session. We had so much turmoil. You had the Jeff Sessions out as Attorney General. Secretary Pompeo called off his trip to North Korea. And then there was that press conference. This market is looking intriguing. Let's ask our experts, Kingsview Asset Management Chief Investment Officer Scott Martin, Vice President of Division 4 Funds Distributors, Heather Zumaraga. Heather, yesterday's session was remarkable, because success begat success. And for the first time in a long time, I saw panic buying. Where do we go from here?
I love it. Panic buying, and maybe more today into the close. Who knows? Look, the markets expected this outcome in terms of Democrats taking the House, Republicans keeping the Senate, and gridlock may be a positive for Washington. Regardless of who's in power in Congress, markets historically after midterms in Q4 rally 8.5% on the S&P and 14.5% over the year following midterms. So it looks like markets are on their way up from here, Charles.
Scott, I know people keep using the term gridlock, but you think back to Reagan, Tip O'Neill, you think back to Clinton and Newt Gingrich. There were major adjustments made after midterm elections on both sides, and we actually got things done. It felt like yesterday the market was reacting to perhaps things getting done, infrastructure, drug pricing, other things like that.
Yeah, maybe immigration reform too, Charles. Who knows? The only thing I would caution, Zoom knows her stats. That's Heather, by the way, if you're playing at home, sports fans. But here's the thing. These are all based on traditional political climates and traditional political history. And I would say, my friends, this is anything but. So I'm just not too sanguine about the prospects, Charles, of that stuff getting done. I would love to see it. So I think, yes, the panic buying was maybe a little premature yesterday. I do love to see it. But the Fed news today is definitely a reason, I think, to be a little bit more excited about the market here.
Did you catch that, Scott, what the last panel said? Pretty intriguing, the notion that maybe because of that third quarter report on GDP, the precipitous decline in the business investments could be one of the reasons or excuse that will let them pause.
Yeah, it's a great call that Lindsay Piegza made because she's right. I mean, that's a big change, and it's a quick one. It's interesting. In Fed's past, whether it's Greenspan, Yellen, they tend to take a little bit longer time, Charles, to adjust to, say, some of those nuanced changes. To see Powell and his crew already comment about saying, hey, maybe we'll slow down a little bit, given that slowdown that we've seen in investment, shows that they're really in tune with how the market's behaving here.
Yeah, I think that the only reason that companies are holding back on some of their business investment is because of the trade issues, Charles. When you look at the trade deal potential at the G20 in terms of potential between President Trump and President Xi of China coming to the table with a new agreement or a new deal, that may be what some companies are waiting for because the tariffs have hurt some companies here in the U.S.
Yeah, I think the dollar, though, has done a lot more damage. Yesterday, Michael Kors stock was down 17% because of the strong dollar. Everyone's mentioning it from Google, the 3M. But let me ask you about today's session, Heather. A lot of bright spots, including retail. Ulta Beauty, which I'm in, my subscribers are in, it was going to be down $11. It's up $15. Crocs. Remember Crocs? You must remember Crocs because
I didn't wear them.
Someone's wearing them. The stock is up 183% in the last 52 weeks. So these retailers building a head of steam into the holiday season. What does that say about the consumer and the overall market, Heather?
Well, that's a big plus for the consumer. Maybe Scotty Martin is wearing Crocs, but look, the Fed said that the economy is very strong.
He's got the fur version, by the way.
I'm sure.
That's right.
Pink fur boots. Look, the Fed even said that the economy is very strong. We have a robust labor market. Wages are increasing 3.1%. I think consumer discretionary and materials are leading the market higher today, but meaning that people are out there buying. Consumer discretionary names are doing well because people have more cash in their pockets.
Yeah, materials have been the best performers over the last week, in part to hopes, I think, on better infrastructure or an infrastructure plan. Hey, Scotty, Heather, we got to leave it there. Always enjoyed talking to both of you. Thanks a lot.
Thank you.
Well, while stocks are shrugging off the Jeff Sessions situation, Democrats, they're digging in.